in this video, I'm just going to keep it short and just we'll discuss the market, basically this article that I have posted. So it's not going to be very long. So what is that? It was significant volatility. Gold and silver prices experienced significant volatility over the past week, driven by escalating U.S.-China trade tensions, renewed safe haven demand amid geopolitical uncertainty, and expectations of Federal Reserve rate cuts. Both metals pulled back from record highs late in the week, but remain on track for strong weekly gains, reflecting broader investor fight to precious metal. Physical demand in Asia remained robust, with Indian premiums reaching decade highs ahead of festivals, while supply tightens, particularly in silver, exacerbated price swings. So that's the thing. And then what gold has done is, so as we discussed before, it surged to a record high above 4,300. So to be said exactly, it was like 4380, $44,380.79. That was the future gold spot price chart that is showing up here, candlestick chart. So that was the highest price, and during the week of mid October 15, around this range, October 15 to 16. Then it retreated to settle to 40, to 2.1% to settle at $4,213.30 on October 17. Okay. But here is currently the when I captured this chart, it was showing 4,250. So anyway, the price fluctuates. Okay. And this price was pressured by a firmer US dollar. Of course, this is a belief that if gold is going down means that your US dollar is getting stronger, but the reality is that your US dollar has lost most of its values over the decades. Okay, so but anyway, okay, but if we see a weekly gain, so gold posted a weekly gain of approximately 2.3%, building on a monthly rise of 16.27% and yearly increase of 55.7%. Year to year, gold is up nearly 52% and has outperformed most asset classes amid economic turmoil and tariff fears. So what were the key news in the gold sector, and what were the drivers of this rally? So the rally was fueled by investors' diversification away from U.S. assets due to political upheaval, including an ongoing government shutdown, delaying economic data. HSBC raised its 2025 gold price forecast to 3,455 per ounce and projected 5,000 by 2026. I don't know what is this. Yeah, it has been much higher than it has already crossed this 3,455 points. So maybe they have to revise their targets. As we know that like the person who like David Hunter, who updates his updates his gold and silver price target both in long and short time span. So his near-term forecast for gold is $5,000. He has updated it, and then long-term forecast is $20,000. Which he thinks, David Hunter, by the end of 2030, I think, end of this decade. But there is another analysis is it's not just him. Many other are projecting gold to be much higher. By the end of this decade. So if we see this historical gain in gold prices, it's like around as I was reading a few days ago, like a day or 2 days ago, it's like around 9%. So even if we cumulative return in gold, if we calculate that way, so it is going to eventually go up to much higher prices in the end. Okay. So we are saying here Barclays analyst noted unprecedented inflows into gold-backed ETF, surpassing prior peaks. So yeah, people are buying gold-backed ETFs, surpassing prior peaks. Okay, London bullion trading volumes rose 0.9% week over week despite the price jump. So everything has been indicating that higher gold prices. So and then what happened to silver? So silver silver has hit 45-year high of $54.47 per ounce early in the week before falling 5.6% to $51.20 on October 17th. So that was a big jump from 54.47 to 51.20. Okay, and then weekly gain was about 2%. Okay, so for this month silver has gained up 29.59%, and yearly gain is 60.78%, and is trading currently. Well, this was the price on my chart. Okay, so and when I wrote this, it was 53, around this point. But yeah, it was a bit earlier. So anyway, this chart was created later, so it was like around $52. So the key, and then we see year to date gains have exceeded 75%, outpacing gold due to industrial demand, because silver is not just a safe haven asset, but it has a huge industrial demand, and it is being used in every industry. Solar panels, electric vehicles, and like semiconductors, computers, jewelry. It has huge demand, and that's why there is that makes sense. And then there was a dramatic squeeze in London silver market, which drove prices above New York futures, with the gap narrowing from $3 to $120 per ounce. Okay, the Silver Institute reported 2024 industrial demand at 680 million ounces, up 4% year over year. It projected flat for 2025, but it representing 59% of total demand, led by solar, which is 195.7 million ounces. So it's, according to their analysis, the highest demand is coming from solar panel. Now I don't know if it's highest, but yeah, the solar demand is 195 million, 195 or 90, around 196 million. So ETF inflows hit 95 million ounces in first half of 2025, and which was a 3-year high. So yeah, that target is not correct. HSB, this looks like their target is not right. Okay, so I think they should have updated their targets too much higher. Maybe they haven't revised their targets recently, HSBC. So yeah, we are seeing this silver chart here, which is showing the pattern from this 20. It was 2020. Yeah, 2020 bottom during COVID. So 11.6, and then it was it went to around $30 range, and then traded down to $17, then went up to, and this $17 was around like August or September 2022. And then from then there have been like a big like swings. So it's like a silver, it's like there are more volatility, you can see in the chart here. But yeah, now it was like kind of like flat, but this time now we can see from there, this point, since this point, which was in May, I think, May 2025, that was the lowest, and it is like, you can see here, is like really you can see this parabolic pattern here. And according to long-term analysis of this parabolic uptrend, my guess is that it would hit $100 soon. Mean like in few months. And other people also have this similar kind of analysis about few silver prices in the next few months. So that's a huge gain still to be made in the next coming months, but we have to be watchful. And of course, when silver is going to be double from this current, almost double from the current prices, then of course miners will be much will gain much, because they are making a lot, tons of money with these higher silver prices, silver and gold prices. So both silver and gold miners are having huge earnings because of their like profitability at the current high prices of gold and silver. So of course those are also going to benefit, and especially junior silver miner, they will benefit the most, because they have been like lagging have been the laggers during this rally. So they are now, usually the trend is that at the end of the bull market, which is like parabolic end, so if we see, it has been like an uptrend from this point. Okay, I mean long term, even if you see 11 point, it has been, but there have been like huge corrections. But now you can see real parabolic trend here, and that's the last part of the sharp part of the bull rally. And during this sharp period, sharp rally period, junior silver miners and also gold miners, they will experience significant gains compared to the senior mining companies. Okay, so how much time I have done? It's already 20 minutes. Okay, so now I suggest there's some general some news about this, significant news from the senior mining companies like Gold Mining Inc. that intersected 37 meters, grading 2.26 gram per ton gold at its São Jorge project in Brazil, with 163 meter corridor at 1.02 gram per ton US gold gram per ton. US Gold Mining plans an initial economic assessment for its Whistler gold copper project in Alaska, and this company HC Wainwright raised its DRD Gold Limited price target to 36.25 from 30.5. Okay, then in silver, First Majestic Silver produced a record 3.9 million silver ounces, which is 7.7 million silver equivalent in total in Q3 2025, which was up 39% year over year, with a strong output from Mexican mines. Okay, then second, this company Americas Gold and Silver announced robust antimony production at its Galena complex, the only U.S. antimony mine. Endeavour Silver achieved commercial production at its Terronera mine in Mexico on October 1st. And then there is SilverX Mining released an expanded PEA for its project, showing after tax NPV 5% of 440 million and 69% IRR. So overall, the sector benefits from a 5-year supply deficit and gold's role as a hedge against tariffs and inflation, with miners focusing on expansions amid record inflows. And what happened to compared to the gold sector? Let's see what other the entire financial market has been doing last week. So we see U.S. equity markets ended the week lower after a sharp sell-off on October 10, triggered by renewed U.S.-China trade tensions and Trump tariffs announcement on Chinese imports. This erased earlier gains from record high earlier in October, with volatility spiking, where VIX hit 21.6, the highest since May. The government shutdown delayed key data, but the Fed's Beach Book indicated stable economic activity. Banks kicked off Q3 earnings strongly, with JP Morgan, Goldman Sachs, and others beating estimates, boosting sentiment midweek. Investors now eye federal rate cuts expected in November and upcoming report from American Express and Taiwan Semiconductor. Year-to-year indices remain positive, led by tech-driven gain.